and Bitcoin and gold are lifeboats, and Bitcoin's the best lifeboat. Okay, so I paid 10 grand for some seats on the lifeboat. I paid 400 for one seat or two seats, and I paid 70 grand for another seat, whatever. Okay, the price to you today is 80 grand for a seat. So you can either stay on that Titanic or you can buy a seat for 80 grand. Do you care that I bought some at 10? I mean, look, Max bought a bunch at 2, and I'm jealous as can be about that. But, I wasn't smart enough to see it back then. I didn't do that. So be it. I mean, everybody feels like they pay too much for Bitcoin.
Hey guys, welcome to Everyday Finance. You won't believe what will happen next in the crypto market, which is on the verge of collapse. After plunging to a startling low of $77,000, Bitcoin has slightly recovered above $80,000. However, the atmosphere is shaky, and there are indications that something much more significant is about to happen. The storm is just getting started, with mounting recession fears and a massive sell-off triggered by Mt. Gow, moving over 11,000 BTC. According to seasoned financial expert Lepard, this is a significant turning point. He thinks that the market's current volatility is only the start of things to come. He believes that Bitcoin is an essential asset to guard against the continuous pressures of inflation. But he cautions that the future will be extremely unstable. Although Bitcoin has the potential to reach new all-time highs, it also runs the risk of plummeting back to $70,000. Not all investors can tolerate this degree of volatility. And it's not just cryptocurrency that's being sold off. Global markets are engulfed in fear, and risk assets in general are suffering. Concerns about a recession are growing, and the Nasdaq, which tracks important tech stocks, has entered correction territory. Because Bitcoin is closely linked to US stocks, if equity markets continue to be volatile, the cryptocurrency market may find it difficult to recover. What is the market's future trajectory, and how can investors safeguard themselves during these uncertain times? Stay tuned as we delve deeper into this pivotal moment in Lawrence Lepard's explosive interview. Remember to subscribe, like, and turn on notifications for more posts.
Well, I think there's a chart in the book that shows this. I mean, and I think it's really important and incumbent upon all senior Bitcoiners or people who've been in it a while and they're trying to orange pill their friends to explain to their friends what this asset is and how volatile it is in these early days of adoption. And the only way, as you and I both know, the only way you really get hurt in Bitcoin is to chase a new price high, to then have it go over the top of the cliff and go down, 20, 30, 50, in the worst case, 70 or 80%. But I don't think we'll see many of those anymore. But I mean, 50% down seems entirely doable to me from any level, really. And then to sell, because the cycles tend to be about 4 years, and everybody who's been in it over 4 years is in the green, has made money on it. But but it's sad, and some people just don't understand that. And again, it's having a long time preference, and so it argues for dollar cost averaging. It argues for buying it when it's down. I mean, how expensive it is. There are models that you can use to look at that. What multiple, how far above or below its 200-day moving average is it? I mean, when it's below its 200-day moving average, it's obviously tends to be on the cheap side. When it's way stretched above that, it can be a little bit ahead of itself. And so one would say that, the best way to get involved, I mean, right now it's below its 200-day moving average, I believe. I'm not 100% sure that, but I think it is. And, so it's probably a pretty good time to be buying right now. I mean, the power law model actually, I think, has some predictive capability. I mean, there's a 97% R squared on, looking backwards on the price there. And I think the power law has it today. It should be at about 97 as fair value. So it's 82. You're buying it at a discount, and it's the nature of the asset. I mean, I suspect, in this run, it's going to go to 200, 250 sometime in the next year and a half. And then, by the way, it'll get overextended and it'll come back down to 125, it'll lose half its value. I mean, one thing that has happened, and I think it'll continue to happen as it's more widely adopted, is that the fluctuations will not be as large. I mean, in the early days, I think there was one drawdown that was almost 90%. I just can't see that happening anymore. I think that, and there were several that were 70% ish. I think that even those probably are unlikely, but when I advise somebody buying it, I say, look, buy what you know you can live with for a long period of time, i.e., 5+ years, and understand that if it goes down 50%, the correct move is to double down, not to sell it. Or if you don't want to double down, fine, but just hold it, because as you and I both know, it continually hits higher highs and higher lows. So I mean, obviously better to be buying during one of those low periods. But if what we're talking about here is an asset, particularly you're young, that you're going to hold for 20, 30, 40 years, I mean, if these are going to be worth $1 million a coin, and I see that happening within 10 years easily, does it really matter if you bought it at 80 or 96 or 105? I mean, all three of those prices are at $1 million a coin are going to look really good. So, that's kind of my advice. Another thing I say, I mean, on making the case for buying it, the two other things I use, because I have a lot of friends who are, fairly well off, and I've tried to convince them to buy it, and some I've been successful. Most of them I haven't, to be honest with you. Most of them think I'm nuts. And what I say to them is, I say, look, guys, if the financial system is the Titanic and it's going down because the government's out of control and they can't stop printing money, which is what the book talks about, and Bitcoin and gold are lifeboats, and Bitcoin's the best lifeboat. Okay, so I paid 10 grand for some seats on the lifeboat. I paid 400 for one seat or two seats, and I paid 70 grand for another seat, whatever. Okay, the price to you today is 80 grand for a seat. So you can either stay on that Titanic or you can buy a seat for 80 grand. Do you care that I bought some at 10? I mean, look, Max bought a bunch at 2, and I'm jealous as can be about that. But, I wasn't smart enough to see it back then. I didn't do that. So be it. I mean, everybody feels like they pay too much for Bitcoin.
A significant change in global finance that has the potential to completely alter the rules is being revealed by Lawrence Lepard. Rich Middle Eastern countries that have historically invested in gold are now subtly adopting Bitcoin as the new digital gold. Saudi Arabia and other nations are subtly hoarding Bitcoin in order to take the lead in this revolution. Given Bitcoin's increasing potential as a neutral reserve currency, Lepard is optimistic about this change. The financial world may undergo more change in the next 5 years than in the previous 20 years combined, as U.S. leaders continue to investigate Bitcoin's strategic value. He also explores how the U.S. economy is changing, especially how Donald Trump's changing views on Bitcoin may alter international finance. Trump was initially dubious, but his advisors convinced him that Bitcoin offered a competitive advantage, particularly when compared to China. Bitcoin may play a key role in restoring American manufacturing and balancing trade as the dollar declines. Lepard thinks that when the Federal Reserve is forced to print more money due to monetary chaos, Bitcoin will flourish. Bitcoin is the best option for navigating uncertain economic times because it cannot be printed. Let's examine this explosive interview in more detail, using additional clips. Keep an eye out.
Well, look, Bitcoin is honest money driven by math, and it's the most honest form of money mankind's ever had because there's no dilution in it. Even gold gets diluted at 1.7% a year, and the book has a whole chapter. I mean, where the title of the chapter is "Sound Money is a Moral Issue," and it really is true. I mean, there's a lot of history to support that. I mean, people in the Bible, this is thousands of years ago, they were writing about honest weights and measures because the history of people messing with the monetary system to try and get advantage. This has been around for a long, long, long time. Fiat currency has abused a lot of people over many, many years. This isn't some new problem. It's kind of new and acute right now, getting more acute, post 1971, and as we go into this whole cycle. But I think what'll happen is, the broken money like we have, fiat money like we have, leads to fiat sort of behavior, gambling and, bad morals and not thinking about the long term and, just kind of spending your seed coin and cheating to get as much as you can, as quick as you can, because you really don't care about tomorrow. Whereas, sound money people very much believe in investing and being patient and You plant a seed and for a tree and you watch it grow, and you don't chop the tree down just to get the wood when it's a couple years old. I mean, and so to me, money is all about kind of reaping and sowing. I mean, you've got to reap savings, and then ultimately you'll sow the benefit of those savings. Of course, you won't if you're saving in fiat terms, because the government's going to rob you. So, but if you're saving in a sound money thing, I mean, I think it's one of the things the human mind doesn't necessarily always understand is the benefit, is exponential functions and the benefit of compounding. I mean, I would say to anybody who's young, I've done this with many people who are becoming investors. I take them to a financial calculator and I explain to them, that if they start off with, just saving $10 a week, and investing it in something that can return 10% a year, and they start this in their 20s, it's virtually impossible that they don't end up in their 50s or 60s worth millions and millions of dollars because of the value of compound interest. And so, but that takes a long-term perspective, and a lot of people tend to not have that. They tend to just want instant gratification. They want the new car, they want the new house. They don't want to save. But they pay for that in the longer run because they've given up opportunities. And to be frank, I mean, in a broken system where it's very hard to save and where you're being robbed if you save, like you are with fiat, I get it. I mean, there's a reason. The lottery. Take the lottery as an example. The lottery makes absolutely no sense. I mean, first of all, the government's raking off like 40% of it, right, for their own income. Second of all, the odds of winning it are just like so astronomical. Why bother playing almost? But to somebody who has no other hope, who just sees they're in a system and they're screwed, it's like a little sliver of hope. And they're like, well, I realize I'm probably throwing this $2 away or this $10 away, but who knows? Maybe I'll hit it and my dream will come true. That's and that's a sad way to be, because that $10 invested and saved could become $100. It could become $1,000, over years. So, but it's unfortunate, and it's the nature of the system that we have right now. People's incentives are wrong, and they've been turned upside down, and the old virtues have been lost. And I know a lot of young people think, well, the old virtues are just for fuddy-duddies, but the old virtues, there's a reason they were there. I mean, over hundreds and thousands of years. I mean, not eating your seed corn, was a time-worn phrase. And you eat all your seed corn, guess what? You're not going to be able to plant next season. You're not going to have any corn. So, savings is the basis of creating capital, and then deploying capital correctly is the basis of improving productivity, efficiency, and society. And the book talks about this, where the price of capital, which is what the interest rates are, absolutely positively has to be set by the free market in a fair manner, or else you get stupid malinvestments. You get money thrown at wars, $8 trillion in the Middle East, etc. And so having sound money leads to, quote unquote, a sound society. Society does not do stupid shit when when the money is sound, or is less. I shouldn't say it doesn't do stupid shit, because human beings will always do stupid shit. but there'll be less stupid shit if the money is sound, at least in my opinion. So I was kind of long-winded, but I hope I got at what you were looking for.
Recent drops in inflation in the United States have sparked concerns about the escalating trade war, which has dampened investor enthusiasm for high-risk assets like Bitcoin. Bitcoin continues to face market turbulence as a result of these concerns. Despite the fact that inflation has decreased, the price of Bitcoin has remained unchanged. Experts have warned that rising geopolitical tensions and fears regarding trade could impede any potential surge in price. Lawrence Lepard is of the opinion that Bitcoin thrives during times of monetary disorder, which highlights the fact that Bitcoin is a scarce asset that cannot be printed, in contrast to traditional currencies. As the United States economy is experiencing increasing disruption as a result of trade conflicts and the possibility of money printing by the Federal Reserve, he suggests that the United States economy is diversifying away from its dependence on the dollar, and Bitcoin may be the solution to this problem. The behavior of Bitcoin, which is unaffected by positive inflation data, demonstrates the platform's profound connection to shifts in global financial markets. Lepard highlights the fact that Bitcoin is uniquely positioned to maintain its value over the long term despite the instability of the financial market. What are your thoughts on the possibility of Bitcoin acting as a hedge against economic instability? Share the video with your friends, let us know what you think in the comments, and don't forget to like and subscribe.